Hey friend, I'm Brandon Gustafson. I help beginners like you launch their assisted living business in the next 12 months. In today's video, we're going to be talking about understanding the top expenses for assisted living to help you become more profitable in your business. So if you're interested in that, make sure you stick around for today's video, and welcome to Assisted Living Investing. Hey friend, before we get into the topic for today's video, I want to remind you to go over to the website, assistedlivinginvesting.net. In the big blue box in the top right corner, you can grab your free underwriting calculator for us. And it's going to help you out as you're trying to figure out what those expenses are, which is exactly what we're going to be talking about today. So make sure you go grab that free underwriting calculator. Again, it's the big blue box at the top right corner. You cannot miss it at assistedlivinginvesting.net. Now, let's hop into our topic for today. This is all about understanding the top expenses for your assisted living business to help you be more profitable. And I have an acronym that I like to use to help me remember these top 5 expenses because I always forget one of them. So I created an acronym because this is healthcare. The acronym is WIFUD, W-I-F-U-D. It stands for wages, insurance, food, utilities, and debt service. These are the top 5 expenses that are going to make up 80 to 90% of all of your expenses. So if you have a really good understanding of what they are and how to control them a little bit better, you're going to be a lot more profitable with your assisted living business. All right, let's talk about wages. So wages are going to make up, 50 to 80% of your expenses. It is a huge chunk, and we have a video that we did, and we'll link that up above, that talks specifically about wages. It dove really deep into that. So make sure you go watch that to understand what it looks like. But wages will make up a huge chunk of all of your expenses. So if you can hone in on what wages are going to be for your facility, you're going to have a really good idea of what your expenses are going to be looking like. And it also can kind of help you understand how if you pulled a lever, if you didn't need so many employees, or if you had to pay somebody more, what's that going to do to your expenses? Because it's a huge number. It's a huge way of kind of adjusting things. I don't want you to skimp on your wages though. I want you to pay your staff a fair wage, if not a higher than fair wage. You want to make sure that they are feeling valued, that they want to work for you, because they will talk and word will get around. If you're kind of a stickler for money, people don't want to work for that. But if you are paying them a good, higher than normal wage, and you're giving extra bonuses, you're doing gift cards every now and then, those types of things, people like that, and it's going to endear them to you and make them want to continue working with you at your facility. And it's a lot easier for you to keep your staff rather than having to deal with turnover. It's a headache when you have to deal with turnover. It's expensive. You don't want to do it. So make sure you're doing what you can to keep your staff happy. So don't skimp on your wages is what I want to tell you. Next is insurance. When it comes to insurance, you're going to need your property insurance, you're going to need liability insurance, and you're going to need workers' comp insurance. All of these can be a little bit tricky to get because assisted living, especially if you're a brand new facility, not a lot of insurance carriers will insure assisted living, number one. And when you're new, they're not super comfortable with the risk. So what I encourage you to do is get with an insurance broker, somebody especially that kind of works in a commercial space. They will be able to know which insurance carriers can handle this type of risk. That's what you call insurance. That's what they call it in the industry is risk. They want to know if how that's going to go. You're probably going to have higher rates in the beginning, but those rates can come down as you prove that you don't have any issues in your facility. So finding a good insurance broker can help you make sure you have the best rates, have the proper insurance coverage, and then when you go for renewals, which happens on an annual basis, they can help you out with that as well. They're also great if you're working with the state or Medicaid or somebody else and they need what's called a certificate of insurance. They are great at helping you get all of that extra paperwork things, all of those extra things that you need to have. They're great for you to have in contact. So insurance broker is a key person for you to kind of have inside of your network, and somebody that I use all the time as I'm trying to figure out how to obtain the insurance, proper insurance, and making sure that we are staying in compliance with any of the regulations that are out there. So property, liability, workers' comp, you need to understand what those look like. Work with an insurance broker that can get you quotes and help you understand what those look like, and see if there's any way for you to adjust your coverage or potentially reduce your rates over time, which is something that I would encourage you to do because insurance can be expensive, but it's also necessary. You want to have it. We've had instances where insurance has saved us tons of money, like hundreds of thousands of dollars. So make sure you have insurance, make sure it's good coverage, and it will save you in the long run when something inevitably comes up. Now, let's talk about food. So when it comes to food, food is going to be a pretty big expense for you. You've got a lot of residents that you're going to be feeding. A metric that I really like to use is what's called PRPD, per resident per day. And inside of that, what you're going to say is most of the time, I promise you this is a real number, $8 to $10 per resident per day is what you're going to be paying for food. And now I know you might be thinking to yourself, there's no way. You can't feed that many people on that little amount of money. But I promise you can. There's industry research out there. I have done this with my own facilities. If you want to be conservative, use the $10 number. Or if you want to be super conservative in your underwriting and your numbers, use a $12 number. But you don't need to go more than that. You have to remember, these are not teenage boys you're feeding. They're more than likely elderly or some other population. But they're not eating all day, every day. And even though you have to provide them with 3 meals and snacks throughout the day, they're just not eating a ton. Also, you're buying in bulk. You're buying for a lot of people, so you get discounted prices when you are buying in bulk. Now, let's use a quick example so you can kind of see exactly what it looks like to pay for the food for your residents. Let's say you have 10 residents in your facility. Let's say your per resident per day rate that you're going to be paying for food is $10. That's what you're allotting for it. So 10 times 10, that's 100. You're paying $100 per day for the food for every single resident in your home. You want to multiply that by 30 days in a month, and that's going to equal 3,000. Boom, now you know exactly kind of ballpark what you're going to be paying for food for your residents inside of your facility. $3,000 a month with a 10-bed facility. It's a pretty average number. We, for our 16-bed facilities, sometimes are around that number as well. So you can do this. You can figure out what that number is. It's a big expense. You're going to need to do it. You need to feed your residents, but it's not going to be nearly as big as you think it is. That's an encouraging thing there. Now, let's talk about number 4, which is utilities. When it comes to utilities, you're going to need to be taking into account your gas, your power, your trash, your internet, your TV, all of these things you need to have inside of your house. Some municipalities are going to combine things like power and gas and trash. Some of them are going to have separate. Some of them are going to have private vendors. With trash, you might need to go get somebody that gives you a dumpster. Maybe you have a municipality that will get you a bunch of different garbage cans. We've experienced both of those situations. So you kind of have to figure out what that looks like. For TV, do you need to have traditional satellite or cable, or can you go with streaming services? A lot of the times when you're working with an elderly population, they want TV. They want that satellite and cable because they really just want the local news channels. So if you can find a streaming service that does that, then maybe you're okay. But you want to be taking all of these things into consideration. These are the really cool thing about utilities, though, is if there's anything that you can kind of negotiate and find some cost savings in pretty easily, it's going to be in your utilities. We've had a lot of success doing this with like our trash, with internet, and with TV vendors as well. So those are 3 big ones that you can find a few $100 extra in savings over the course of a month, and that leads to a few $1,000s over the course of the year, and that can really help you out quite a bit. So you want to understand what those utilities are, who the vendors are there other options out there, can you negotiate, and putting in a little bit of time up front to negotiate better rates and better terms with them can really save you quite a bit of money on the back end. So that's something that I want you to be aware of, that you need to have these utilities, but you can find ways to get some cost savings in there with them. And the 5th one that I want you to be aware of is debt service. So your debt service is basically your mortgage or your lease payment. So this is the amount of money that you're paying to be inside of the physical facility itself. So this, if you have an SBA loan, or you have a mortgage with a lender, or you're working with a private money lender, or if you are just leasing a property from somebody, that amount of money that you're putting into that's going to be your debt service payment. You have to make this, or else you could get evicted, you could get the house repossessed, and you don't want to do that. You want to avoid that. And when you're working with lenders, they'll look at what's called a debt to income ratio. They want to make sure that the income potential, or income historically, is going to be able to cover that debt. They are most focused on that. They want to make sure that there is nothing there that's not going to allow you to make that payment. As you get into other strategies for funding things, you could be looking at a DSCR, debt service coverage ratio loan. And when you look at those, they specifically are looking at what that debt is, that debt service, to see if you're going to be able to cover that to purchase a building, to buy something, to lend you the money. So that's another thing that you could be considering. But you need to really kind of hone in on what this number is. In our underwriting calculator at assistedlivinginvesting.net, it's the big blue box in the top right corner. You can go grab our free underwriting calculator. Baked into that calculator is a mortgage calculator. So if you know the rate that you're going to be paying, you know the terms, how long it's going to be, and the amount of money that you need to borrow, you can figure out exactly what your debt service payment is going to look like. So go use that tool. It's going to help you out as you're trying to figure out what your debt service payment is going to look like, as you're trying to just gauge, what are my expenses going to be looking like. If you can figure out these 5 expenses, the WeFoot expenses, it's going to be 80 to 90% of all of your expenses. So you figure out your wages, insurance, food, utilities, and your debt service. Figure out those 5 things. You're 80 to 90% of the way there with all of your expenses. And it's going to really help you understand from an underwriting perspective, is this going to be profitable or not? And how can I back that in? You take those expenses, add an extra 20% on top, and then you look at what your income potential is going to be. And if there's a gap there, boom, now you know what your net income is. Like, underwriting is that simple. There's a lot more that goes into it, and you want to make sure you understand the numbers and you're being conservative in your underwriting, but it's not that hard at its core to figure out what these numbers look like and figure out what you have the potential to cash flow on these businesses. And once you are in the business and you're running the business and you're trying to figure out exactly what that's going to look like, if you can look and understand these 5 big expenses, your WeFoot expenses, then you're going to understand what levers you might be able to pull to, or what happens if you pull a lever and prices increase, your expenses increase, or if you can pull some levers and decrease some of those expenses as well. So hope you found this video helpful. There's a lot packed in here about understanding the expenses and what that's going to do for you and for your business. If you found it helpful, make sure you like the video, subscribe, and ring the bell as well, so you get notified every time we put out content like this. We go live on Tuesdays, and we put out content like this on Thursdays as well, to help you out as you're on your assisted living journey trying to launch your assisted living business. Does residential assisted living sound interesting to you, but you don't know how to get started? At Assisted Living Investing, I'm here to help beginners like you launch their assisted living business in the next 12 months. I love helping and coaching people, and I would love to be a part of your journey as you're trying to launch your assisted living business. And remember, it doesn't take a lot, just a little bit. Just keep going step by step by step, and I promise you, if you do and you're consistent and persistent, you're going to be successful. Thanks for watching, and have a great day.